Hello, this is Japanese Economic Review Channel. Today, we're diving into some really wild data coming out of the Kinki Region's condo market for January 2026. You know, the latest stats from the Real Estate Economic Institute are showing a market that seems to be, well, breaking all the rules. We're seeing supply and prices both shoot up at the exact same time. So, let's dig in and figure out what's really going on here.
Okay, right out of the gate, the first thing that just jumps off the page is the supply. 1,074 new condominium units hit the market this January. That is a massive jump of almost 40% compared to this time last year. It's a huge surge, and it's our first clue that things are really heating up. But that's just one piece of the puzzle. Now, you'd think with all these new places available, prices might cool down, right? Well, take a look at this.
Yeah, prices aren't just heating up. They are smashing records. The average price per square meter soared to 999,000 yen. And just to be clear, this isn't some small bump. It's the highest price for the month of January ever. So we've got this really strange situation, a flood of new condos on one hand and record-shattering prices on the other. It just doesn't seem to add up, which leads us to the crucial question, is anybody actually buying these things?
And the answer is a big resounding yes. The contract rate, that's basically the percentage of condos sold in the very same month they were listed, came in at a super healthy 72.3%. Now you gotta understand, in this industry, anything over 70% is considered the benchmark for a booming market. So even with way more units on sale at these crazy high prices, buyer demand is right there keeping up.
Okay, so let's recap the puzzle we've got here. A surge in supply, record prices, and incredibly strong demand all happening at once. To really get how this is even possible, we need to peek behind these headline numbers. Let's start by looking at the core dynamics of supply and sales.
Just to give you some perspective, that 1,074 new units, that's the most we've seen in a January in 8 years. So this isn't just a one-off blip, it's a pretty significant trend. And that 72.3% contract rate, well, it's actually the second month in a row the market has cleared that all-important 70% hurdle. That tells us that buyer confidence is holding strong. It's clear that both sides of the equation, supply and demand, are firing on all cylinders.
All right, now let's turn to the price tag. We already know it's a record, but the rate of growth is where the story gets really interesting. This chart really spells it out for us. The average price for a whole condo unit is up almost 14% from last year. But here's the kicker. Look at the price per square meter. It's up even more, at 14.2%. And that little detail is super important. It tells us it's not just that apartments are getting bigger or fancier. No, the actual underlying value of the space itself is increasing at an incredible rate. That is a powerful sign of just how hot this market is.
And look, if you think I'm exaggerating, just read this quote straight from the Institute's official report. This isn't a record for the last few years or even the last couple of decades. We're talking about the highest price per square meter for any January since they started collecting this data way back in 1973. We are literally talking about a 50-year high. Let that sink in for a moment.
So, where is all this activity actually happening, and what kind of properties are driving these incredible numbers? To solve this puzzle, we've got to zoom in and look at the specifics because the devil is always in the details.
Wow. Okay, one look at this and it becomes immediately obvious what's going on. Osaka City is the engine driving this entire market. It accounted for more than half of all new units supplied in January. Then, if you add in the rest of Osaka Prefecture, you're looking at over 72% of the entire region's new condo supply. So the action is definitely concentrated, but that's not even the biggest reveal.
And here it is. This is the key that unlocks the entire puzzle. When you look at what's actually being sold, get this, a staggering 546 units, that's more than half of the total supply, were classified as investment properties. They're not homes for people to live in. This one single detail changes everything.
This table just lays it bare. It's like we're looking at two totally different markets running in parallel. See what happens when we pull those investment properties out of the equation? The contract rate drops from that sizzling 72.3% down to a much cooler, much more normal 64.6%. And look at the price. The average price for a residential unit, a place someone's actually going to live in, is way higher at almost 65 million yen. This tells us the market for regular homes is quite different. It's actually more expensive, but the demand isn't nearly as frantic as those headline numbers would have you believe.
So, now that we understand we're really looking at two separate markets, one for investors and one for residents, what does the future hold?
Let's take a look at the forecast in our final takeaway.
Well, it looks like this trend isn't slowing down anytime soon. The official forecast for February predicts that this high level of supply is going to continue with about another 1,000 new units expected to be released. What that tells us is that developers are feeling confident. They're betting that the strong demand, especially from that investment sector, is here to stay.
And that brings us to our final thought for today. We're seeing a market with two faces. There's the one driven by investors, which is pushing all these headline numbers to 50-year highs. And then there's the other face, the reality for residents, for regular people, who are facing ever-increasing prices. The crucial question this all leaves us with is this. Is this massive surge in investment creating a new, permanently less affordable standard for everyone else? Thank you for watching the Japanese Economic Review. We look forward to having you with us again.